You know, Anneka, I want to get your macro market view, but more than that at the beginning, what I'd like to do is talk to you as a resident of the Netherlands. You are in Europe right now. We're talking about all this stuff that's going on, gas rationing, petrol at $10 equivalent U.S. gallon, etc. What's the future, both short-term and longer-term, for Europe and the European economy? I mean, it seems almost impossible to consider that some kind of steep downturn, if not a deep recession, is on its way.
Hi, Brian. No, absolutely. And it's just a very odd situation. I think we're all sort of baffling through because on one hand, there are enough reasons to be very concerned, very bearish. And that's why consumer confidence has fallen off a cliff, right? Below global financial crisis levels. On the other hand, it doesn't feel like we're in a recessionary environment or getting into one. Restaurants are fully booked. Holidays are fully booked. Flights are full. They're expensive. So it's a very odd state of affairs. And even if you look at the analyst estimates, bizarrely enough, and this is not only for Europe, by the way, estimates are going higher instead of going lower for company earnings.
So where's the disconnect? By the way, I completely agree with everything you're saying. If I went to Schiphol Airport right now, it's probably packed with 2 to 3 hour lines, same way in the United States. So somebody's getting it wrong.
Somebody's getting it wrong. And I think the first point is, let's go back to consumer confidence, because that's what everybody is talking about right now. That is shockingly low. The fact that consumer confidence is below global financial crisis level is amazing, because that's a moment where hundreds of thousands of jobs were being removed from the economy. Right now, we have the opposite. So what you're seeing is, very simply, consumers are using their savings to bridge the gap. And we all know this is not sustainable. And that's the scary moment that we are all anticipating at the moment.
Do you see either our Federal Reserve or the European Central Bank or the Bank of England having to flip at some point, Anneka? I know it sounds ridiculous. We're talking about rates going up. I get it, but I'm looking out a little bit longer. And one wonders, when do we start talking about the ECB and central banks starting to pull back a little bit, maybe ease the economy? Because if European natural gas prices stay where they are into the winter and it's cold, and I mean this with respect, you guys as a macro economy are in big trouble.
Absolutely. And it's funny you mention this, because it's equally viable to consider the macro environment we're in right now to see rates going up as it is to see rates going down. And how odd is that? And I think the scary thing is central banks, so the ECB is talking about core inflation, not headline inflation. There's a reason for that. The difference between core and headline, the big differences are food and energy. And that's exactly where the shocks are coming from, i.e. central banks don't have the tools to combat food and energy price growth. And well, that's essentially the scary thing, because the only way to combat price growth in food and energy is to have massive demand destruction, which is the scenario for ugly recession.
Let's try to leave it on a more positive note from an equities perspective, Anneka. European equities have tended to always trade at a slight discount to the U.S. Our S&P 500 is like 16 to 17 times earnings. I think most of the European markets, the major ones, are 10. I think some are even lower, and some well-known companies are in the mid to high single digits on price to earnings. Are European equities getting to the point where they're kind of cheap enough to look at, regardless of everything that we just talked about?
No, Brian, you're absolutely right. And there are gems in there. And that's what we in a house are doing, going really, really fundamental, nitty gritty, because as said, you can't just look at PE and trust what that multiple is telling you. In many cases, it's a nonsense story. You need to look at the E, look at the cash flow. And to your point, there are plenty of European listed businesses that are global in nature. So absolutely, yes.